Before we go on, we have the WPI data that is coming through. The June inflation is at 3.6%, as you can see on the bottom of your screen currently. The June WPI inflation is at 8.68% versus 7.4% in May. When you talk about the primary article inflation, it's at 8.8% versus 7.2% in May. And when you talk about the June WPI for fuel and power inflation, it was at 1.03%, slightly lower than what we had in May. And when you look at the manufacturing product inflation, it's higher at 1.43%. And when you look at the WPI inflation on a whole, it's at a 16-month high as of the latest data as of June of 2024, and this is the food inflation is at 8.68% versus 7.4% in May of 2024, and we have other aspects of that are coming in. We have the primary articles inflation that is seen an uptick, as well as the manufacturing product inflation that has seen an uptick at 1.43%, and we'll also be getting more insight on the same, and we will have Pallavi joining us in a short amount of time. But just when you look at how the markets are reacting as the inflation numbers and data come in, let's just pull up the Nifty 50. It's up 0.3%. Not much of a change to what it was at the start of the show, but it's in the green nonetheless. We have counters like NTPC, ONGC, and Bajaj Auto still gaining in trade today. We also have Shriram Finance, SBI, Dr. Reddy's, as well as Ultratech Cement that are up in trade. The counters that aren't doing so well: Grasim Industries, Asian Paints, Tata Steel, LTI Mindtree, Axis Bank, and JSW Steel. Now let's just kind of address the Nifty mid-cap 150 and talk about how stocks are moving in that index. We have Aurobindo Pharma, which is up 6% in trade today, as well as Oracle Financials and Alchem Laboratories, both up 4.5% in trade today, as well as Apollo Tires, and this is the whole tire pack in focus that we have. But with the WPI June inflation numbers coming in, we have Pallavi joining us to kind of give us a more detailed outlook on these numbers. Pallavi, how are the numbers looking?
Right. So as we can see on our screens, the WPI inflation figure for the month has come in at a 16-month high. Now, just to put it in some perspective, this is not entirely on unexpected lines. We had seen WPI inflation remain in contraction for the longest time. It was we were actually seeing deflation on the wholesale prices front for a substantial period last year, and now we can see that the index is normalizing gradually. This was largely driven by commodity price decline that we've seen last year. After that, we have seen some increase, and from a market's perspective, the increase in WPI because of the rise in commodities is expected to seep into the margins of companies as well as at some point. Retail inflation data had also come out last week. Even in case of retail inflation, the figures had come in at a 4-month high, and this was largely led by the rise in vegetable prices because of the prolonged impact of heat waves, as well as the late onset of the southwest monsoons. So in case of the WPI as well, we can see some of that impact kicking in. WPI June food inflation has come in at 8.68% for the month of June. That's compared to a print of 7.4% in May. June WPI primary articles inflation too rose, and it came in at 8.8% versus 7.2% that we had seen in May. Manufactured products, that actually forms the largest component of the index, also saw a rise coming in at 1.4% versus a figure of 0.78% in May. We have Madan Sabnavis, Chief Economist from Bank of Baroda, online with us. Sir, thank you so much for taking time out for us.
Yeah, thank you, Pallavi.
So I do want to start off by asking, what are your quick thoughts on the headline figures that are coming in? The WPI inflation figure has come in at a 16-month high. Was this largely among expected lines, and what is the trajectory expected to be going forward?
So in fact, for us, it was more or less on expected lines. We had a forecast of 3.7%, and the major reason is that the prices of food items have been moving up in the last few months and have remained high, something which has also gotten reflected in the CPI numbers which came out last week. So I think it's the same trend which we are seeing and the same trend which is going to persist in the next couple of months. And given the fact that what you had mentioned, that we've had this low base effect where the numbers were very low last year, I think we could see this number going up. Now, this would also mean that there would be more pricing pressures from the point of view of input costs, especially for the food processing industry. And that is why I think that is something which could again feed into the overall CPI inflation. So we also saw CPI inflation had a very high inflation for food products, above 8%. And that's something which is going to continue to persist, not just in terms of the primary products where prices are going up, like of onion, potatoes, and tomatoes, but also of processed foods.
Okay, now I do want to ask you how much of the price rise going forward as well is likely to be driven by vegetables or the food component, and how much of it in the WPI index is also because of the price rise we've been seeing across commodities?
No, I think the main thing is going to come from all the food commodities. Vegetables is, of course, we have seen the highest increase which has taken place in terms of the prices. But if we're looking at things like cereals, looking at something like pulses, I think until we have the next season coming in, the next harvest, which will come in the month of October, I think that the so-called kharif crops, or what we call crops, I think that inflation will continue to remain high until October, because the stocks are getting depleted. They were produced last year, and as we come to the end of the cropping year, there will be a tendency for prices to increase. Vegetables typically would be more seasonal in nature. It's more temporary. So until the next crop, which we're expecting from August onwards, which would be coming in, there should be some respite coming in for those commodities. Okay. But again, if you look at things like spices, I think the prices, it has a very low weight in the index, but the price increase has been quite phenomenal in the last 1 year because of lower production.
Okay, all right. Is this then, since the current print might be partly on account of the rise in food prices, is this expected to ease going forward, considering that we do expect prices to come off, like you said, once fresh arrivals hit the markets, maybe sometime around September?
See, the thing is, the prices would definitely move downwards, but given this base effect, I think the inflation number, the WPI headline inflation number, will continue to be at an elevated level. I don't see it going back to the levels of 1-2% which we had earlier. It's more likely to prevail in this region of 3-4% for a prolonged period of time.
Okay. Now, one last question before we can let you go. Looking at commodity prices as well, is there any impact we expect on margins of companies going forward, especially given that last year a lot of companies did see relief on that front and did benefit from lower commodity prices? That's clearly something that is expected to change this fiscal.
No, I think that is going to happen because there's going to be a secondary impact. So when I spoke about processed foods prices going up, I think that's kind of adjustment which will be made by companies. And we would be seeing the second round of inflation coming in. A number of companies actually held back on their price increases last year because they knew that the headline inflation was already high and the affordability issue was always there. But today, when you're seeing that your input costs are going up, it's very unlikely that this cost will not be passed on. But the whole question is whether it will be done immediately or whether it will be done in the next quarter. So I think I would expect that in the second and third quarters, there would be a tendency for some part of this price rise to get embedded, because even for some of the agricultural crops, like vegetable prices, will definitely return to the normal price. But when you look at things like cereals, you look at things like pulses, or even edible oils, of course, we don't have a problem with edible oils today, they normally tend to settle at a higher equilibrium, which means that the inherent cost, the basic cost, would tend to be higher. So I think there will definitely be a secondary round of price increase on the food front.
All right. Thank you so much, Mr. Sabnavas, for taking time out for us. Mehka, back to you.
Yes, thank you, Pallavi, and Mr. Sabnavas, to kind of give us an insight on the latest WPI data.